One, I'm sure that it gives you a lot of value addition or direction, because as I said, our objective is not to learn each and everything today, but to get the right direction. So now I am very happy to invite Shailesh Agrawal ji, and I am very thankful to Motilal Oswal AMC. Today we are sitting in cool infrastructure and learning. So it is thanks to the Shailesh ji and Motilal Oswal AMC Akhil ji and CEO Mr. Ashish Somaiya. So let's have a loud clap for them, because I have interacted many senior professional, but I found it very different culture in Motilal Oswal AMC, specifically in team of Ashish Somaiya ji, where their objective is to promote the knowledge-based activity. Okay, so I am very happy that today he'll share his philosophy, Motilal Oswal AMC philosophy, how it can add lot of value addition to their customer and you. Welcome to you, sir.
Thank you so much, KOG. In fact, chance that I'm going to talk about, but I was actually impressed quite a bit with the experiences that prior speakers have shared. Uh, the entire purpose of working on Sunday is basically to understand and to gain. For the matter, you know, 5 days a week, 6 days a week has been madness. Seventh day, come on, yeah, give me a break. But the ideas of doing this is what? The idea of doing this is basically to gather more information, more knowledge, and to be more able thereafter make ourselves stable. Yeah, that's how it has been. At Motilal Oswal, we basically follow the similar kind of things that we can do, things that we are able to, for the matter. So I will be in next half an hour or so. I'll be taking you through what we do and how we do it, and thereafter, if you have any question and answer, please do let me know. So my name is Shailesh Agrawal. I head the business for Motilal Oswal AMC for AP and Telangana. I take care of both the products. We have two as of now. One is a PMS, portfolio management services, and second is the mutual fund business, for the matter. As a company is concerned, company has been there in the market for 30 odd years, probably from the days the BSC got started. And ever since, we have been doing only one job, which is equity, equity, and only equity. We don't know anything else apart from that, and we don't do anything else apart from that. So it is something like, I'm a specialized company. I'm a specialized person who can diagnose issues with only one product, only one asset class, which you can choose upon for your own customer base to make their financial goals come true, which is equities today. So, before that, something just struck my mind. I thought to narrate. It was a small story that was told to me a little while back by a gentleman whom I consider to be quite, placed in terms of both knowledge and aspirants, for the matter. What he said that we all have been into, marble shops before. Marble shops, they cut, chisel, do things up. So once what happened that a gentleman went to a marble shop, and in marble shop he saw many men working over there. So he went to the first person and asked him rather, so what are you trying to do? He said, hey, come on, don't bother me. I'm too busy. I've got seven more to be done, and we're almost half a day crossed. So he said, okay. He went to the second person and said, what are you trying to do? He said, this is the only thing I know, yeah. This is the only thing I know, so I'm doing this. I need to take care of my family. I need to take care of my own self. I need to take care of my retirements. I need to take care of my children, education, medicals, so on and so forth. So I have nothing else to be done in the world to take care of my well-being. This is the only thing I do, so I'm doing this. He went to the third person and said, what are you trying to do? Then that man said, I'm trying to take out everything from the stone which doesn't make a sense to me. So basically what he was trying to do is that he have a thing in the mind that he wants to make a statue out of it or a piece out of it. He's creating the piece in the mind and chiseling everything out. It's focused. It's a focused thing. It's basically that he is only able to see the eye of the bird when Arjun was asked to shoot the arrow on there. It was not about, you know, the entire set of pieces, people, air, noises. He has checked everything out for the matter. So the moral of the story is do things what you like to do and what you are able to. At Motilal Oswal, we do things, we basically does two things. We do things what is possible, and we do things what is possibilities. Possibilities basically in the sense that we are able to see through. You know, over the past 30 years of work experience that Motilal Oswal has, we have articulated the entire experience, how to bring it down to the investor's perspective in a simple word called buy right and sit tight. You know, it's an English jargon though, but the idea was how do you make it more simplified for the investor. I'll come to that, but before that, I would like to take you through. I don't have much of slides, so don't worry about it. I will not take your mind share, which will make you sleep for the further on sessions. I have something else that might be interesting to you guys. So this is 2 by 2 graph. You know, 2 by 2 graph basically speaks about what you know, what you don't know, what you know, you don't know, and what you know, you know. Which basically means that if I say there is a man standing on the left side of the door, I know he's standing or he may be standing, but it doesn't matter to me. Or I'm saying the gentleman whom I met while on the way to this place, you know, he's a good man. He gave me the way in beyond the traffic. He's a good man. You know, doesn't matter to us. So basically, I'm trying to correlate a story here by telling you that we do things that we understand and we do things that we're able to see through for the matter. Now, you know, how do we do it for the matter? How do we do it? We do it by a stringent process that we have internally built up. The process has been improvised, the process has been tested, the process hasn't failed, and yet we have come up to remove the mistakes that we have done in the past and the mistakes that a lot of normal man does while doing equities in their life for the matter. It recollects me of Warren Buffett's theory that if you can live Saturday and Sunday peacefully without looking at your portfolio, you might as well do it on the weekday and make better money. What I'm trying to make a point here is that the more you look, the more decisions you make, and chances of you going wrong is rather high. So if you have brought a right kind of a stock, right kind of idea, sit over it, time is a solution. You know, I was actually, you know, would like to compliment sir that he was mentioning that his father has brought so many of IPOs. If I may take a liberty, sir, to articulate the thought. Articulation of the thought may be like this, maybe I'm wrong, sir, pardon me for that. You know, those days why people buy IPOs? I had my father as well who was indulgent buying every IPO that was available on the block. The reason was that let me comment out. So reason is that I'll add it up. The reason is that, you know, even prior to that situation, people had instances stating that their assets are growing at 20%, 15%, 30% on year-on-year basis, and they don't even know which one of that which they will hold will make that thing happen. Are you all with me? Yes. Today, sitting here, or today at this point in time, I said, had I bought HUL, had I bought Wipro, had I had Infosys, had I had Colgate, BHEL, PTC, Reliance, I would have had a big man today. All of you must have read the stories that if I had bought Wipro at 1982, go to Google, type wealth creation study. Only one idea will come out. That is Wipro. 10,000 is equal to 540 crores, sir. I'm wrong. I'm wrong. Why this thing is happening? Why are those things happening? And had I known that then, I would have done nothing else in the world but to buy Wipro. You all with me? But how do you know that? How do you know that? You want to be lucky? Everyone cannot be lucky. मेरे कुंडली में तो पैसा है ही नहीं. Money is not there my कुंडली. जहाँ भी हाथ डालता हूँ, लॉस ही आता है. मैं जिस दिन वो स्टॉक में पैसा लगाऊंगा, मार्केट नीचे जाएगा. Guaranteed. So what you do is that you look at me and go contrarian. Go other way around. You'll make money, but I'll lose. So I mean, that was a little on the lighter side. So how do we get to that? So getting to that is basically the logic to the entire thing that we manufacture at Motilal Oswal. And of course, we do have the stalwart like Mr. Ramdevji himself, who basically has been practicing this and has been advocating this from last 30 odd years, how to create wealth not just by investing in the equities. He has done 20 such wealth creation studies in the past, which basically blocks, your possibilities to make more money. He basically have created reports on every second week of December every year, which is called wealth creation study, that talks about what all things is required to become richer, what all things you should not do. It's called wealth creation study. So what we do over here is basically the outcome of those wealth creation, and basically does less job in order to do less mistakes. So as per him is concerned, if any of the company which is growing at, let's say 20%, it's growing at 20%, what are the chances of that company becoming double in 3 years, 4 years, 5 years? 100%. Heads off. 100%. What is the risk in that process? Beautiful. Time is the only risk. What you cannot control in this market is the stock price. What you cannot control in the market is stock price. Today we are talking about so many issues globally. Talking about Brexit, talking about BRIC-in, we're talking about commodity burst, we're talking about crude, we're talking about currency, we're talking about every goddamn thing. And so we are available at 8,000. Had these things been not be there, we'll be at something else. Good or bad, that market will speak. But you need to do things that you are able to do and you can possibly do. So we work on possibilities of equity markets. Yeah, I saw that. Thank you. So if the company is growing at 20%, my money can technically be double at 3.5 years if we are tailwinded. That means if the market situations are positive. If the market situations are headwinded, I'll take 4 years, 5 years, 5.5 years. I am always in the money because I'm going to ride into those companies which basically first of all make net money. I'm a shareholder of that company which basically makes net money irrespective of market conditions. So to speak, I have nothing to do, Modi is there or not there, Brexit is happening, not happening. I'm showing positive balance on every quarter on the balance sheet. Few quarters here and there can go bad. But if your projections, if your understanding is right, and if you're able to see through the business models, you're able to make better judgment in terms of which company we need to be boarding on. Can you tell me which company has the largest FII holding in India today? And why is it? Haji? Very good. That is one of the ways. Very good. That is absolutely attribution.
Compared to the peers across the globe,
They make money.
performance is much better than
Consistent. Okay. Ethical. Progressing. Market opportunity. The market of that segment is humongous to give more to HDFC. In fact. And so why would I hold 86% and why would public in India will hold lesser than that? is basically the reason that in India the financial literacy lags short. My stock is trading at 1,000 rupees, which is all-time high. It's already high. Why should I buy that? Let's get into something else, which is a cheaper price, which is at lesser price. So here, the lesser means not the value of the company. The lesser means the price at which that company is available at. What we buy in equity market is the share, and what you share is basically the profits of the company. No profit, no sharing, rather negative. So we don't share anything which is a loss. If you're sharing a loss, you take a hit on the balance sheet. You take a hit on the pricing. It's something like we work on economic advantageous companies. What is economic advantage means? A moat originated businesses. Are businesses that would have a unique reason for its existence. Why would a company survive? Let's say HDFC Bank, let's take an example. Why would a HDFC Bank survive? HDFC Bank will survive because it's the largest lending company. Largest lending company in India today? Definitely yes. HDFC Bank will survive because its balance sheet grows 22% every quarter last 20 odd years. Couple of quarters here and there is fine. HDFC Bank has not performed in last 3 years barring 2 quarters. Stock price. The moat of this business is that there is no competitor that can be as lending aggressive as HDFC Bank. Rest all the business models are peripheral to HDFC itself. I have a 22-year track record of a company with a 20% plus growth. Would this qualify to become Infosys, Wipro, TCS, HUL, BHEL, Mahindra Sumi, TTK Prestige, Aisha Motors, Page Industries, Hero Honda Motor Corp, name it. Asian Paints, very good. Bajaj Finances. Yeah, recent one is TTK Prestige, correct. So what does it require? It requires the first part of my presentation is a buy right thing. What buy right means is that you cannot say that I have hold Reliance Industries, I am sit tight only, but it's just not moving. For which you need to buy right first. You need to have a right set of purchase in order to qualify for the sit tight. How many of us do understand the structure? This is no stock ideas. I'm just trying to share my views. There's nothing that I have seen it. I'm just trying to share that what is the logic. Why would Reliance Industries go negative by 50% in last 8 odd years?
One. And second thing, they are investing heavily on the capex.
Yeah, there is no profit, sir.
Profit is a different scenario. They have invested close to about $50 billion on capex, which is coming into productivity shortly.
Possibly emotional disbalance towards the investors. Confidence index, they have not utilized 54,000 crore in the balance sheet. So many things. I'll add up one more thing. I don't know which company owns what in Reliance Industries. Yeah, I mean, structuring is bloody complex. Yeah. This is not that I have seen, I'm just giving you a thought. I have read it somewhere, I'm giving you a thought. That why wouldn't Reliance Industries did well? Why wouldn't ICICI did well? Why wouldn't BHEL did well? PTC, NHPC, why didn't they do well? One, confidence index is mismatching. There is no transparency when people are able to see through the business model. For the matter. Now, buy call for us, buy right means very important thing, which we have articulated in the following fashion. I'll share that with you. We need to first understand why would that business will survive. What is the reason for the survival of that business for, let's say, next 3 years, 5 years, 7 years, 10 years, 20 years, 30 years? Take example of Bosch. It's a classic case in India today. What is the market share of the Bosch today? It's highest. So long anybody will use diesel, Bosch will survive, for the matter. So if the Bosch has the model of spark plug and fuel injection as the market leader, how long this leadership will last? And at what rate they'll make the business grow every year basis? For us, we need to understand what is the moat of the business model, or what is the reason for which business will survive, and by promoted by what kind of management. We need to understand the ethical parameters, the competence parameters of the promoter itself. It's very important to be with the promoter. It's very important to understand that by looking at the balance sheet, I project that this company will grow at 20%. Here on, with the following business model, but promoter have something other in the mind. Could be in terms of capex, for the matter. So you can be right or wrong, but your idea of holding the company and the reason for why stocks are moving can be different. You need to know the management, you know the business model, you need to work closely with them. For us, quality becomes the heart. What is the reason for why people will use Royal Enfield as a motorbike? Quality, social status,
That's the only bike available in that category.
across the world. Absolutely, sir. Across the world. Aisha Motors at all-time high. Will the company shut down the business? Then stock price will not move. Take example of, let's say, you know, on the innerwear segment, there's a company called Jockey. Are they competing? No, they're not, sir. They're competing on the higher middle class society, which can afford 300 to 500 rupees a pair. They're not competing in the rural areas. They're competing with the market which they are willing to give the quality, consistency at a price.
It's overpriced, right? At current price,
Again,
all over India, we have to wear at least 2 sets to get that price.
sir, I'll tell you something. They have 63% of the world share. You know, they have 63% world share. I'm not an analyst, I'm a salesperson. But they have 63% of the world share. They have got to India through a franchisee ownership by a company called Page Industries. They're 35 years sold right. Few years back, they got 5 more countries sold right for 35 more years. I don't know. It's a call. It's a call that one have to live by. So for us, we need to know the advantage of the company for its survival, promoted by what level of competent management. We need to know what is the competency levels. I woke up late in the morning. Honestly, Keyur sir, I woke up late in the morning. When I saw the watch, I jumped up and said, today I'm going to be late. I drove my car at 100 speed. I didn't know that we were going to be half an hour late. I didn't know that. Had I known, I would have taken breakfast at home. But what I do know was, I need to reach here before time. Intentions. You need to be correct in your intentions in terms of what do you want, money for yourself, money for the stakeholders. We need to know that. We need to know the competency, ethical, competitive advantage of the business model. Thereafter, you know, the second part is the growth. If I'm owing such kind of businesses, what rate are we expected to grow? I'm not interested in anything below 15-17%. I'm not just interested in any company which will grow below that, because might as well go and buy index. Might as well go and buy anything in the index. I need to be better off. I am not interested in below 15-17% company. A company which is growing at beyond that, I'm interested with the stability in the business model. Every portfolio that we hold, be it a mutual fund or PMS, will have better ROI. You know, we're talking about ROI. I have prepared something else. I'm going randomly. I'm not just sharing this. This is an interesting piece, sir. I'll share this with you how to read. So I have a data from March 1995 till March 2005. I have the latest one, but that is not readable over here. So this is 20-year data. 20-year data speaks that the company on the Sensex, the companies on the Sensex, how much is total aggregate earning of that YOY basis? So this is the Sensex growth, and this is the EPS growth. That means the total companies put together earnings, how much it's grown on a YY basis. You'll be surprised to know that both the companies, the growth of the Sensex and the growth of the EPS is same. It grew at 11%, both Sensex and the EPS. What does it say? But there is one more catch. Absolutely. That market did not grow on a steady fashion. So the dotted line is the EPS and the darker line, which is going up and down, left and right, are the Sensex. That means your market has a lot of things that adds up before it really discounts the prices. It could be emotional. It could be Brexit, as simple. It could be that, yeah, come on, Russia is going to go down because crude is not workable. It can be anything. It's oversold, overbought situations, but the end result is same. Like sir rightly said, bravo to you. It's time that will bring a solution. Your earning, your income in a company is equal to the profits the company makes. The point of showing this graph to you is this. You will make as much income in a stock as much the profits the company has. You all with me? So the growth, we are interested in 15-20% plus growth kind of companies. We're looking at those models that have a longer life, longer competitive advantage. You know, let's say if you talk about, let's say, a company called Bosch, how long people will use diesel? 5 years? 10 years? 20 years? 30 years? People are talking about electric cars, come on.
Max another 15 years.
So we are right now. As of now, people use Bosch. Bosch are also looking forward to do a lot of R&Ds in terms of de-risking their business models. But as of now, Bosch has no competition. You all with me? So long this economic advantage lasts, we would like to hold the stock. We sell the stock only when there are three things happening. First, we are going wrong. We can go wrong. Everybody goes wrong. If I'm going wrong, irrespective of market conditions, stock prices, levels, exit. Exit. We don't care. We don't really time the market because we don't know what is timing the market mean. We sell the stock in a situations when, let's say, Airtel bought a company called Zen in Africa. It happened a few years back. We know Airtel rupee by rupee, second by second operations in India. We know the promoter quite well. But we didn't know what was Africa. We sold. We didn't know what is Tata Steel in UK. We sold. Thirdly, which is a rare situation, wherein the stock has discounted to further price to short period of time. That means the company profit that is expected after 3 years, 4 years, 5 years, the valuation of that price stock is showing it today. You with me? It's basically reducing the risk and the time that has already been discounted. Not booking profits. We don't do that. We don't do that.
We are getting 3 years ahead the profit.
Because we are not really comfortable with the risk that time can bring over a period of the duration, because of which the market is already discounted for the matter. And of course, the price in which one gets into. Warren Buffett always says that time is the friend to the long-term investor. And time is the enemy to traders, short-term investors. The first quote which I said about Warren Buffett was, if you can keep your stock with you without even bothering on Saturday and Sundays what is the price, you can do the same thing on weekdays as well. And because you have bought the right stocks, sleep peacefully. You have nothing to worry about, which is one thing, time. So this is what the buy right means for us. This is exactly what we do while we're talking about buy right. 85, 90% is the quality of the company. Absolutely clean. We don't compromise on the quality of the company. If you are not able to see through a company, we're not able to see through the promoter's intention, we rather not get into it. We don't get into it for the matter. So let's say if there are 6,000 odd companies in the market, if you filter it out, probably 50-60% will be filtered by quality parameter, then growth, then longevity, then pricing. You hardly left with 20, 250, 300 good quality companies. The companies depends upon the price that they are quoting at, the business models, the balance sheets that you're getting into. You can buy and hold those kind of companies. So buy right means this for us. Sit tight is basically, buy and hold. Buy and hold doesn't mean that I bought something and sleep over it, it's going to grow off its own. No, it doesn't happen like that. Buy and hold means that you basically telling yourself and reiterating the fact that I have bought this company, and every second you tell yourself, justify why shouldn't I sell this company. Buy and hold means that. Buy and hold doesn't mean that you just bought over a company and it's going to be Infosys. It doesn't work like that. You need to tell yourself every second that why shouldn't I sell this? And then of course, when you're doing so much about a company into it, you cannot hold 50, 60, 70 stocks. You cannot hold 50, 60, 70 stocks. You need to have stocks, those you are able to get the information, you're able to get a chance to interact with the management, transparency levels from the management to yourself, with a limited number of stocks. We don't technically go beyond 20, 25 stocks in our portfolios. So for us, this is the heart. This is what I do technically. This is what I do. We have two products with us. One is a PMS, another is a mutual fund. For us, it doesn't make a difference. If the investor is investing in a mutual fund or a PMS, both stand same. Somebody who doesn't have 25 lakhs, which is a minimum corpus required for the PMS, he becomes a natural customer to the mutual fund. PMS and mutual funds for us is same pocket, two different ways of defining it. Now this is an interesting slide that we have. I just thought of sharing. I was going through somewhere, found the slide. I thought to just rob it and put it here. Something called, had I know that technology will be the future to tomorrow, I would have bought Infosys. Had I know that PSU banks is going to basically create the market for the private sector bank, I would have brought it sometime. Value migration basically means is that customer base having a faith in one product getting shifted to someone else because of its natural requirement, natural demographic changes. The graph speaks about how much was the market share of the PSU banks, public sector banks, SBI, Allahabad Bank, Bank of Baroda, so on and so forth, had earlier because there was no private sector companies. And how much they are today. Still they have the dominancy, but dominancy has reduced. We would like to get the stocks like this, that people are not just buying a Aisha motor because it's a Harley Davidson of India, but people are buying, it is the only bike in the world that generates 20,000 rupees profit per lakh rupees sale. There is no other bike that can compare that. So it started with Colombia, now US is the next destination. The largest selling bike in Colombia today, not just in India. Indonesia, they are there. They bought over a bike designing company. Earlier, let's say 5-7 years back, what all kind of Royal Enfield you see in the market? Only one. Two. Classic and Thunderbird. And today, there are 4 variants. So we would like to buy this kind of a company and hold them over. The classic example is when you buy a stock of 100 rupee and the 100 rupees goes to 1,000 rupees. Bloody hell, 10-time return. What should we do with that? We don't do anything. Unless until we are sure about the company is going to shut down. because company is making money. Company is making money, increasing the balance sheets, getting a profit, increasing the market share. Last quarter was best for Royal Enfield, both in terms of profitability, in terms of market expansion.
What happens if there is a disruption?
We will sell it. We will sell it, sir. We are interested in the company so long it company makes sense to us. We are asset managers. So such transparencies was not there 25 years back, you know. But I would have wished my father would have held on to Infosys. He sold it then. He was an SBI employee. And I remember Infosys was undersubscribed. Satyam was undersubscribed. Satyam went to a fiasco, which is something else. Below power, sir. Correct. Below power. I have heard so many companies going lips and bounds. You mentioned about TTK Prestige. How many people really know about those kind of companies? Fantastic companies. SRF, Container Corp, Crystal. But how would we know we should buy it and when we should buy it and how much we should buy it? Warren Buffett also says one thing. I'm quoting Warren Buffett again and again for the reason because we do exactly what he used to do and what he is doing. The only difference is that he's a value investor, which looks at value at any point in time. We look at value plus growth because of the demographic in India today. India market FD rate is 7.5%, 8%, which is not the case in a lot of countries today. So we're looking at 12, 15, 17% growth on ROI basis, and we are still able to afford to talk about further on. Warren Buffett says that, the return in the portfolios are made not by knowing a stock. How many people doesn't know Royal Enfield or Bosch? The return in the money is made by how much of your wealth you are putting in that stock and how long one is holding it. So idea is that if I start with a 10% of my book into one stock, it doesn't mean that I have done my job, I'll shut it down everything. It has to be looked upon every moment, every minute, every day, every year, and so on and so forth, in order to ascertain that you are boarding on the right side. Nutshell, this is what we do. Any questions, if you all would have, I'll be pleased to answer that. I will actually share the product that we have today. We actually are equity focused fund house, which basically means is that if I would buy companies, I would only like to differentiate between the size of the company. So in portfolio management services, we have 3 products. One is a large cap, which is a value strategy, has a vintage of 13 odd years plus. We have a next $1 trillion, which is a mid cap portfolio on the PMS front, which has a vintage of 7 years plus. And one third is multi cap, large, mid, and multi cap. We covered the entire garment of the product, which has a vintage of near about 6 years today. Similar is replicated in the mutual fund side. We have most focused 25 fund, which is a large cap. We have most focused 30 fund, which is a mid cap fund. And then we have most focused 35 fund, which is a multi cap fund. Most focused long term fund is a ELSS, a tax saver, which is a replica of most focused 35. Large, mid, and multi cap, large, mid, and multi cap. We don't have anything else. Focused products. Yes, please. I'll not to share about the performance. I can share with you after we are done with this. Any questions that you would have? Apart from the product, correct.
Are you conducting any intense program to learn about share market?
We do conduct a lot of programs in terms of educational based of sessions that will basically able and stable the advisor. May not be on the stock specific basis, but we do that on the process specific basis. We do that, sir. Absolutely, absolutely. Any other questions? You have to buy the product, sir. That is not possible to say. Yes.
Investor perspective, like one can look at a return on capital employed or return on equity. What are all the key things one should look at?
All right. Are you an analyst, sir? Any chance? Are you an analyst? Okay. I would suggest, let the expert job to be done by experts. We are basically into a profile. We all are into a profile. I am at least into a profile wherein we should not get into ideas that basically require hand holding every moment of time. If today you get into an idea, the idea basically that require X understanding, understanding has to be correct every moment. If you misses out, you don't have right to do that. But answering your question, these are the only fundamentals you can look at. These are only fundamentals that you look at. You look at what is the kind of company you get into. What is the scope of that business model over a period of time, and how long this business model will live, first of all, in order to make money. There was an interesting analysis done by one of my CEO, Mr. Ashish. That analysis spoke that there are near about 1,063 companies that was there as a small cap earlier. How much of those companies really become a mid cap? Take a wild guess. 63 of them, only 63 of them become mid cap. That means balance all died or did not do anything beyond that. How would you know which among those 63 you're holding? And from mid cap, how many of them turn to be a large cap? 3, sir. 3. Haji? Asia was one of them, correct. Ajanta Pharma is again one of them, but it's not a large cap, sir.
3%.
So 3 stocks, 3 number of stocks.
Out of 63 companies.
There was a 5 years duration, which is right, sir.
As a lead distributor, I can convince my client on 2 to 3 aspects. What is the best aspect that you feel? One is the liquidity aspect over real estate. I'm speaking about the real estate. But what is the advantage that an investor has over real estate apart from liquidity, regulatory authority, and basically liquidity is the base. Yeah. Any other benefit you feel I should advise my investor?
So tax is one of them. Real estate. See, somebody who is a real estate investor, convenience is second part of it. I bought a real estate property at 100 rupees. Today the market price is 200 rupees. Please find me a buyer at 200 rupees. Let me have the best of the properties. You cannot liquidate. There is a strict issue with the pricing in which if you want to liquidate, it's just not done. You can't do that, sir. It's not happening. But if you ask me, sir, personally speaking, the closest to equity in terms of risk return perspective is real estate. Is real estate, sir.
Shailesh, I have one for you.
Yes, please.
So you quoted the downtrend and the strategy that Motilal Oswal takes, right? You just scrapped off. So just want to understand, like, is there any agenda? It can't be, a generic question. It has to be more specific. I believe you can't answer it right now.
I'll
know
try.
for sure. But for the best interest of the entire audience, if at all you can just cite, like, when it doesn't qualify the QGLP process, right? You do it, right?
Say it again, sir, please. If you can on the mic, it's off, I guess.
It's on. It's very much.
Okay.
I think. Okay. So I will just rephrase it. When you quoted the downtrend, right? When you say you will come out of a company, if at all they deviate from the QGLP, right? So the call that you would take is simple, like you just come out of it. And most of the Motilal Oswal, the number of scripts that you see, it is only 25 to 30. It's a
Not
valid
even
purpose.
25, 30, sir. None
So
of
when
my
you
funds have 25, 30.
Correct. So when you take a call of just exiting one, it impacts the entire portfolio, right?
Yes.
To an extent, directly.
Yes.
So when it is the fundamental, that is the asset allocation, and also the the exposure, the percentage to the overall portfolio, as a fund manager, what you feel is the right time? Can you still take that call? Because it doesn't.
So if I understand your question correctly, you want to know how long do we hold the average stock. So average stock in a portfolio has been to the extent of 4.5 years plus.
On the downtrend, when you
So
feel
downtrend in the sense the earning terms,
no, no,
stock
let's
price
say
terms.
Motilal Oswal decides that
Yeah,
a particular script has deviated of one of the parameters, right? QGLP thing.
yeah.
So from that point of time, there will be some time that you decide, like, okay, we'll wait and see. Let's say.
Starting from maybe few days to full month based on the
Absolutely, yes.
volume of the
Okay.
value of the script, right?
So we can put it on hold.
Okay.
We can put it on exit radar. We can put it on anything else. We can put it simply that I want to exit every quantity right today, right this moment.
Okay. It's
We
call
can press the
momentous.
red button, sir,
It is
or we
like
can
more like judgment is given.
judgmental.
Execution has to be decided.
Yeah, it's
Okay.
case to case basis.
Also, it is not
So it can't be
overnight.
It
bit
cannot be.
generic.
It cannot be generalized for the
Correct.
matter.
I understand. I got it.
Thank you so much, everyone, for the patient listening.
Okay, no problem.
Thank you so much, sir.
Okay,
Thank
yeah.
you for the opportunity.
Yeah, yeah. My pleasure.